Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading, and welcome to Daily FX Analysis. Be a quick one today, guys. I've got to be at the dentist at 11, so maybe do 25 minutes here, and that'll have to do is quick look at yesterday's economic calendar. Employment and unemployment in the UK. Unemployment rate stayed the same, but the actual employment change was less than expected. Westpac consumer confidence in Australia came in last night at 104. We didn't actually have a forecast here on this particular economic calendar, but the previous is 105, so it's slightly down in that, but I don't think there's much to write home about there. Today is a big day, guys. We've got inflation in the UK, which you see has come in hot. Now, how the Bank of England is going to deal with that, we'll have to see tomorrow. The thing is, obviously, they need to do something to get the hold of this inflation. But at the same time, with Omicron expected to spike into January, it may be a little bit too early for them to move at the minute, guys. So we'll have to see. Let's just wait and see what they say before we decide what direction to trade the pound in. I've been short the pound, haven't traded it, but my sentiment in the pound's been short this last few weeks. But we'll have to see how they react, because those are quite strong inflationary numbers, guys. Okay, Canada core inflation rate hasn't come out yet. Retail sales, United States, FOMC economic projections, Fed interest rate decision, Fed press conference. So that's going to be interesting later today for us. I'm not sure what time in the US that is. Probably around 2 o'clock in the afternoon, I imagine, depending on which side of the US people are on, obviously. And then later this evening, GDP growth rate in New Zealand. So the big one really is this, guys. Let's keep an eye on the dollar today. We'll go over and have a look at the charts right now. Been a lot of movement over the last 24 hours, folks. Let's just move this. Can I move this out of the way? Nope. Let's move this. US CAD, Euro USD, US Swedish krona, US Oz, US pound. So there's been quite a lot of movement on the US. But I see on this is DXY. I suspect those alarms went off as this come down. But since then, it's moved back up. So we'll have a little look in the moment. And then we've had Aussie Swiss, Aussie Euro, Aussie New Zealand, New Zealand Swiss, and New Zealand CAD. So a bit of movement on the Aussie and the New Zealand there as well, folks. So we'll have a little look now. Let's just start with the yen, because we're keeping an eye on that. At the moment, it's still in this corrective structure, guys. But each time it comes to there, I just get the feeling it's going to go again. I don't know that it is, but I'm going to be keeping an eye on that. If that starts to go, I may well short some yen pairs, or at least one yen pair. DXY, this could take off today, guys, depending on what the Fed says. But remember, this is a long-term game. Our trend on the dollar is up. I don't see any reason for that trend to change. But as you can see, it's been up for the whole of the year. But within that, you do get your pullbacks, etc. So because of the structure there, we've been saying it for the last week or so, guys, because of that structure, I'm a little bit wary of trying to trade the dollar long. And I've been waiting to see what the Fed say. Now, obviously, if the Fed says makes the right noises, you could see DXY moving on up today, guys. But that structure, just, these charts reflect human nature, as it were. They reflect what people are doing, what they're thinking, the trades they're making. And when you get a structure like that, often so often you get the other side of that, guys. It would come down into that sort of region, I would imagine, and then it would start to go along. The other thing it could do, you could maybe get a spike up today to there, but I wouldn't be surprised if you then got a C wave down into here before it continues on up. So you've got an impulse, a corrective phase, whatever shape that it takes, and then you move back onto your impulse, guys. That's the picture that I have in the back of my mind, or the front of my mind, wherever it is we make our pictures. So let's see. If that comes off, then I'll gladly trade the dollar. If it doesn't, and it pushes on up through here, I'm going to probably find it difficult to get into it, because at the moment I don't want to get into anything because of the not fear, but because of the recognition that we could get something like that. Now, obviously, I'm talking about getting into a trade. I'm not talking about how you would manage a trade if you're already in it. That is up to each individual's trading strategy. But obviously, at least if you've got dollar trades in the green, at least move your stop loss to zero, folks. Now, this would then be the opposite of that. If the dollar were to give us that short. Now, it could be, why would we get that short? Well, it could be that the Fed are a little bit dovish today, more dovish than the market has priced in, possibly because of Omicron. So they talk a lot about Omicron and the potential downside risks of that. Then that may move the market for a few days to get that leg in there, and then they'll start to trade on up. I don't know if they will, but that's what I'll be wary of. And therefore, if that happens, you will probably see the completion of that. That's a zigzag, guys. You could well see the completion of that, breaking that top before we go. Now, if we had that, I would very happily trade that down, guys. But from here, I find it difficult to trade that. Can it happen? Of course it can happen. Of course it can happen. So the other way to trade that would be to take a small position short now, in the hope that whatever the Fed says, it pushes the dollar long. And if you're wrong, you've got to ride through it. In other words, you're going to have a stop loss way up there. That's why I'm saying take a small position with a low leverage so you don't get hammered. If it goes up to there and starts to draw down again, then you add your position there. So by the time you get down to here, you're in the green with that. You're in zero with that. That one, stop loss, you put to zero, and if it pushes on down, then you're doing very well. Get that stop loss to zero, and then see how far down it's going to trade, maybe down to 110 or something like that. Maybe just 111. But nonetheless, if you got it from there, that would be a good trade. From there, it's not such a great trade, guys, to 111. Oh, there's 111. That might not be too bad. I don't usually trade pips, guys, but, it's at 173 pips or something for anyone who does trade pips. I trade percentages, folks. Pips mean nothing. Percentage of your account or percentage of the amount of money you've put on, that's real, Pips is just, I suppose, is a way of describing how far something's moved, but it's used by too many retail traders as a way of making out that they've done really well for themselves when, either they didn't trade it or the small amount of money on it, or they count from, say from there to there, and then they say, hey, we got X amount of pips today. And no, you didn't get in there, and you certainly didn't get out there. So there's a lot of BS. So anyone that's new, just be careful of all that nonsense of people bumming and blowing about how well they've done, guys. Pound US, a smart investor doesn't bum and blow about anything, guys. a smart investor looks at how to continue to improve what they've done. And that doesn't matter how long they've been trading for. Okay, pound US, if we do get a bit of weakness on the dollar, on the pound, we've been looking for a setup. Now, the whole way down here, I said, listen, I can't trade this because there's no setup. If this were to push up, it would just be a setup to go short again. So let's see if we do get that leg down in the dollar. And I'm just repeating what I've been saying all week, but it's important that we understand that that situation hasn't changed and that outlook is still potentially on the cards. So then potentially we get a push up there, and you're not trying to trade that. Remember, guys, unless you disagree with me, unless you think that the dollar is going to drop and continue going down, I mean, it could well, come down into there. And if that's something you want to try and trade, fair enough. The problem is if your long-term trend is up and you're trying to trade against that, then it can be problematic. Now, there is a situation here where I missed this lovely trade down because I was saying, because I was saying that the trend was up, therefore we were looking for it to pull back down and possibly go long from there or even from there. And it didn't. It continued down and down and down. So anyone who traded that short would have had a really nice trade until we got into that ending diagonal. And then, of course, slowly but surely, it started to rise up again. But the point is, the trend is in that direction, guys. And I don't think that's about to change. Therefore, even from up here, the trend is still in that direction, but we could have drawdowns before it continues. So that's basically what we're talking about here. So for me, I will wait to see if we get this. I'll not try and trade it. If we get it and it comes down into here and it starts to break out, then that's when I'll take long trades in the dollar. Okay, and I always trade with trend. Okay, doesn't mean you can't, trade against it, but I don't. I trade with trend. Now, this is looking very much like an ending diagonal. And yet again, for that very reason, I wouldn't try and trade this short, despite the fact that I'm looking to trade the dollar long. And it also points to the potential for that leg again, which would be DXY short, guys. I'm not going to put an arrow on it because I wouldn't want to try and trade it. But of all of them, well, let's have a look at the Aussie. See the different structure with the Aussie. You could potentially have that going up there, which would also give you that. Maybe that's exaggerated, guys. It may just come back up into there. And then from there, maybe you look to trade it down. US CAD. Now this has continued to push up. I'm surprised about that, to be honest. When we got to here, we did say it would go long. I'm pretty sure we said it would go long. Just trying to think. Oh, yeah. Sorry, that's the dollar. That's the dollar getting stronger because of we just switched over for the dollar to be on the other side. It's gone from base over to quote, guys. So that's the CAD getting weaker there. That's causing that. So maybe if we get that drawdown in the dollar, we get a nice setup to continue trading that in that direction. But I wouldn't jump in there, guys. As I've said the whole way up, if you don't get in, within the first third of what turns out to be an impulse, you really shouldn't be trying to get into it, because invariably, say you get in there, next thing you know, you think you're doing great, next thing you know, down you come, guys, or it comes from there, which is the big problem with trying to trade against an impulse. Same with here, guys. When we were here, if you got in down there somewhere, the first third of that move, fantastic. You're in and you're away. and even here you'd still potentially be in it, although I imagine you would have got out as that dropped. But if you try to get in, say, there, well, you've been stopped out again. If you get in there, if you get in there, you're very fortunate you've actually managed to break even again, guys. But the chances are you'd have stopped it out there, or even down there, you would have panicked and got out. And then this happens, and then you think you're the worst trader in the world. No, it happens. It happens to everybody, guys. The difference is with, if you've been at it a while, you just accept that that's the way things are, and then you try not to get yourself in those situations by not trying to trade long once it's moved, that sort of distance. And see how far to come down. It was going back in this direction. Chances are, whenever it got to that, near that double top, it was going to come off again. So unless you jumped in for a few hours, maybe you caught that, but that's not a big deal, that little trade there. Okay, let's move on, guys. I'm forgetting myself about my time here. I need to get on with it. US Swiss looks like it wants to go long, despite everything we've been saying about the dollar. So what could possibly happen here is that this is a corrective structure, the other side of that, and then you get that before you get that. Now, if we got to here, or maybe even just down into there, guys, you'd have your alarm line on there. As it breaks out, you look to trade it back up. US Sweden, same thing. This one could actually give you a nice flat. Pardon, excuse me. It would have been easy to say you have an A, B, and then you're looking for a C there. But it's become a little bit more complex than that, which we often get. So it doesn't mean it isn't a flat correction, guys. It's just become a little bit more complex. So let's clean this a little bit. So it's still possible for this to come down, break that bottom, and then go. And that's where I'd be interested in it. Oops. Yes, yen. Yet again, I think, in a month's time it'll be there, but whether it goes there directly or whether we do that is the thing I don't know. That's the place I'd be interested. Gold's taking another move short. If I wasn't in gold, I wouldn't be getting into it, guys. There will be a time for gold. I just don't think it's yet. It'll be when we get a correction on the stock markets, and I know the stock market's been drawing down recently, but it's not anything serious. I lament about it, guys, but the account's 6% down. That annoys me, but it's not the end of the world. We're not about to blow the account because we're 6% down. We're not about to give up. We're not about to do anything tragic. But if we got, a major correction on the stock markets, then maybe you end up 20% down or something like that. Well, you're just going to have to claw your way back up with that. That would be the time we did potentially see this go up. But we're not there yet, guys. And if you don't know exactly what I'm talking about there, you probably need to go and look at stopwatch, Dow Jones. It's slowing down. Should have this in a higher time scale, guys. It's slowing down, but so far it hasn't corrected. If it corrects, that's when gold will go long, guys. Okay. And it might not do it in one go, and obviously it'll be, slowly but surely. And that's when gold will start to edge up. So until then, I would stay away from gold. If you're already in it, well, just be patient. Hold on. Just while we're here, the other thing about this is about weight. Let's go to Nasdaq, more importantly. Nasdaq's had a bit more of a correction than than the S&P, guys, basically because it's full of tech stocks, growth stocks, that type of thing, guys. But it's still up there. And then you say, well, how come my stock's done that? This on a daily time scale. How come, some of the tech stocks are way down there if the index is up there? Well, that's because of the FANGs, guys. Your Facebooks, or was it called now, Meta, is it? And your Apples and your Googles, etc. They make up something like 27%. That might be a slight exaggeration, but they make up a very large proportion of this index, and they're still growing, guys. And all the other ones are doing that, which is the reason why I'm drawn down, guys, because that process started, and then somewhere around here, I decided that they were looking cheap, and it was time to buy into them, and they've moved down. So what I'll do with quite a few of the stocks that I have, I'll dollar average, guys. If they continue to drop, I'll dollar average them. And as we go into next year, this may be the first quarter next year. There may be a bumpy ride for a while, but over time, they'll come up. There's where it bought in. Maybe there's where your average is. So sooner than later, you'll start to make money with them. So that's my view of them. Obviously, there's hundreds of stocks. You got to pick the right ones. But that's what I've been doing. And obviously, I'm drawn down at the moment. But going into next year, you'll start to see some green come back on the screen, as they say. So getting back to this, we're talking about gold, weren't we? When that index starts to correct, you'll see gold go long. But we'll talk about that as we get there, guys. And silver will be the same. But I think between now and then, you could well see silver coming down into this sort of region, $19, $20. And then it might be worth just dollar averaging. If it continues to get down, just add a little bit more. Obviously, be careful about your total percentage that you put into it. Have that figure in your head before you start it. And then whenever the stock market starts to drop, then we could well see silver coming up. But we're not there yet, guys. Bitcoin's continuing to weaken. It may well close the gap down to there before we start to see it coming up again. There are people who are saying that it's going to come right down. There's other people saying that this is just a correction before it goes. I don't know who's right. What I do know is that cryptocurrencies are here to stay, guys. And, some of them will make you a lot of money. But you're going to have to be patient. Just as the people were patient way back before, people like me understood Bitcoin way back here, when they bought in here and held on and held on and held on and held on, and hopefully they held on through there, and then away they went, guys. Now, the big boys will have done that. Retail traders probably wouldn't have. They probably would have taken their profit or taken their loss. But nonetheless, anyone who believed in Bitcoin will now have an awful lot of money in their account, folks. I watched a video yesterday of a guy sitting watching Dogecoin going up. Now, he was gambling with it, guys, but he obviously was in a position where he could afford to gamble with it. And he was watching it. Where's my time? We'll just tell you this quick story. We'll get Doge up. Now, this isn't something that I recommend or have I ever traded. But just for the sake of the story, now it was here. This is when Elon Musk was making his tweets about Dogecoin. And what did it get to? Yeah, this was it. Yeah. Or was it here? Anyway, it was between 4 and 9 cents. Could have been. I think it might have been there, guys. Anyway, he bought in around here somewhere. Elon Musk made us, and he watched this on a minute, 1 minute time scale. And when it did this, he hit $72,000 on the day profit with a ×4 leverage. So obviously he put quite a bit of money on it anyway, but nonetheless he hit it there, and then went and bought himself a Tesla. Now, I certainly wouldn't buy a Tesla if it made $72,000 in a day, folks. But his situation was obviously different to mine, in that he probably 72,000 probably didn't mean that much to him. But it was just interesting to see, guys. Can't remember why I started talking about that, but it's out there. If I remember the link, I'll just show it to you. So ETH, same thing. That potentially could push along, but I'd prefer to see it dipping and maybe getting in down around here somewhere, down around 2.8, maybe even 3. But we'll see if it gets there. We'll see, guys. I'm not wanting it to go down there, because I mine a little bit of ETH. It's only $20 a day, guys, but it's a bit of fun, and it adds up. I think I've mined about $2,000 so far in the last 3 months, and it's interesting. Be interested to see what happens when I get the electric bill in. Oil. And the reason for doing that, as I've said before, was to get me interested in crypto, to force me to learn something about it, guys. Oil on the daily. Now they're saying that there could be a bit more downside to oil, but it's not dropping down there, guys. Oil will run in a range here for a while and then eventually go long. I don't trade it, therefore I'm not going to get into the nitty gritty of it. Euro CAD. There's the CAD pulling back with the oil price dropping, therefore the euro's pushing up. Very similar to the dollar CAD trade. Because I'm not expecting any great strength out of the euro, I'm not going to try and trade that any higher. Not that I've traded it so far, but I don't have great belief in that going any higher. Euro Oz. Now this is the only currency trade I have on at the moment, and it's based on the dollar eventually getting stronger. Obviously, if the dollar drops the way I'm expecting, the way I'm hoping that it does rather than expect it to, you could see that, and that would be a better place to trade it from. If that happens, as it's coming down there, I'll add another position to it. I think this structure, that impulse there with that ending diagonal, now we're getting a corrective structure. I think there's another leg down there, guys. And that will come when DXY starts pushing long. So if DXY pushes long today, you'll see that coming in there. But if it takes a dive, I'll have to ride through it before dropping. Euro New Zealand. Yeah, it's an ending diagonal, guys. It's pushed back up. There's your ending diagonal there. It's pushed back up. But for me, it's indicating that. Euro Yen. It's running flat, guys. Just leave it at the minute. Euro Swiss. It's also running flat. I'm kind of looking to see if we can get that. The worry is if you jump in there, each time it's done that, it's pulled back. So it is entirely possible that it pulls back, guys. But if it sets that alarm off and maybe gives us a setup, once the dollar starts going long, that might be worth it. Pound CAD. Well, there's the continued weakness of the CAD that's pushing that pound trade up, guys. I was looking for it to break and drop. Basically because I was looking to trade the pound short. We'll have to see what the Bank of England says today, guys. There's a bit of a mixed message coming out of it. And pound Oz, same thing. But wait for the Bank of England, guys. Pound New Zealand, same thing. I'm looking to trade it down. I did say the other day, don't be trading it short just because it looks like a head and shoulders. Wait for it to drop. Wait for it to set off the alarm. And then make your decision. Because if you go short here, it could well do that, folks. So wait for it to let you know where it's going. Then look for your setup in the ideal world, and then off you go. Remember, it's the ideal world. You'll not always get the setup. Pound Swiss also pushing up a little bit, guys, but I'll not call that one at the minute. Pound Euro. Well, if the euro goes short, it all comes back to what the DXY is going to do, guys. If DXY goes short, then euro will go long, which would pull that down. So that's potentially a trade down into there that I won't be taking. Pound yen. Don't want to trade that one. Aussie yen. Looks like it wants to go long, guys. Aussie New Zealand. It's now breaking out. I don't trade breakouts out of flats, but there are people who do. So potentially there's more there. Aussie Swiss. There's a little breakout there, guys. Now, what I was saying the other day was I'd prefer for it to come down, here and then look for it. But that might be it, guys. That might be it. Aussie CAD. Well, that's pushed on up. But yet again, that whole structure, it could be a running flat, guys. I'm looking for a zigzag as a setup. That could be a running flat. The problem with running flats is they're hard to trade, guys. If on a higher time scale, I'll sometimes trade a running flat. But when it's like that, I tend not to, and maybe that's it. That's it away. So you would still have to wait for the next pullback, guys. Swiss yen. Swiss yen. Same as yesterday, guys. If we got a leg down here, be interested in trading it long. CAD Swiss. If the oil price were to start coming back up, wait for the breakout in the setup. CAD yen, same thing. Wait for a breakout in the setup. New Zealand yen, wait for a breakout in the setup. New Zealand CAD, it's already gone. See the little running flat there, guys. New Zealand Swiss. By the way, if you were going to trade the CAD at the moment, I would trade Aussie CAD rather than New Zealand CAD. Aussie Swiss. Now, is that the start of that move long there, guys? I don't like it. Don't like it. It's not very impulsive. But potentially, at least to there, and then maybe see if it goes further. Then Doge we talked about, guys. Actually didn't realise. Look at that move on Doge yesterday. My goodness gracious me. Every now and again you get these massive moves on Doge. It's a meme coin, guys. I don't really understand the use of it, so I'll not be trading it. But was there anything on Bitcoin? Bit of a move on Bitcoin. A little move on Ethereum, nothing to write home about. Okay, guys, that'll do for the day. I've half an hour to get to the dentist. I'll speak to you all again tomorrow. Bye for now.